Hello everyone, this is Ruth the Forex Lady with another video, and today I'm going to be talking about the TDI. So a lot of persons have huge misconceptions regarding how to trade the TDI. I myself even had some misconceptions regarding the TDI. So today I'm here to shed some light as to how the TDI, or one of the ways that you can actually trade the TDI. So I know a lot of persons who actually trade basically what is known as the shark fins, which is you wait until price comes out of the volatility band and then it crosses back up the signal line and you start looking for your entry to go in that direction. However, that could work, that can actually work sometimes, but if it is you are in fact in a trending market, that may not necessarily work because sometimes it can actually come outside of the volatility band. I'm going to show you an example somewhere and it can actually continue in the original direction. So for example, here it crossed up and then it continued going down. So there are some things that I always look at when it comes to trading the TDI. So you know the TDI, I'm going to just give a short and a brief synopsis of the TDI. You know it consists of the RSI, which is my black line, the signal line, which is the red, the market baseline, which is the yellow, and your volatility bands, which is the blue. Another thing that I tend to look at is what is known as the 50 level. Now it's not important, but it's just something that you can actually take note of, and you're going to see why I said that. So for example, starting with the 50 level, what I have noticed is that when most of the TDI is below the 50 level, for the most part price is selling. So similarly, when most of the volatility band is above the 50 level, price is buying. So if you see, most of this is above the 50, and what happened? You had that nice rally to the upside. Similarly, let's see if we can find where it was below the 50 level, right? So you see it's below the 50 level, and what happened? Price for the most part continue to sell. So one thing I look at is a lot of persons tend to like to wait until you have the RSI and the signal line crossing. Now while that is a valid trade entry, and sometimes it does in fact give you very early entries, whereby you can sometimes even get those really nice wick entries, what I want to do is actually catch the move. So what I look for is not just the crossing of the signal line, but I also look for the crossing of the market baseline. So when you see a movement like this, you know for the most part price is going in your direction. However, what you also can look at is when it crosses the 50 level. That is another either one potential entry or another confirmation that price is in fact continuing the upward movement. The final piece of the puzzle is when you have what is called trend acceleration. So sometimes you may see price coming outside of the volatility band. This is not exactly the best example. So let me see if I can find an example. Right here. Beautiful. So let's start again. You have the RSI crossing your signal line, then it crossed your market baseline, and this is all below your 50 level. So you know that this should be an excellent sell setup, and that is what exactly you had. However, a lot of persons tend to wait until they see price come out of the volatility band to start looking for buying or selling opportunities because you're trying to catch those really nice pullbacks. Now, I myself actually did fall into that trap at some point in time, but I no longer look at that because what I have in fact noticed is that when price comes out of the volatility band, you tend to now have what is called trend acceleration. Look at that beautiful drop. As you can see, price was out of the band, it pulled back a little bit, and it continued staying out of the band until it came back into the band on this candle. Now, even though it came back into the band on this candle and it crossed up the signal line, look what happened. It continued to fall. All right. So this is why I said you have to take into consideration where your RSI is regarding your signal line and your market baseline. So a lot of persons just look at the signal line alone, which I said is a valid trade, but sometimes you also want to look at your market baseline. For those who want additional confirmation, you can definitely look at your 50 level. So if I was to say you're looking for a sell opportunity on the TDI, because you know that persons literally trade the TDI alone. They have their charts looking like this and they just trade. Okay, so if it is you actually want to trade like this, what you can look at, you can see, all right, my RSI is below my signal, it's below my market baseline. This is excellent for a sell. All right, or you can also say it's below my RSI. My RSI is below my signal, below my market baseline, and below my 50 level. So I know for a fact that this sell is a high probability trade setup. All right. So similarly, if you have to do the reverse, looking for a buy setup, you can say what? You have your RSI crossing your signal and your market baseline, and when it came out of the volatility band you had what is called trend acceleration, and it was also above your 50 level. So I really hope that this tutorial or this quick little video helps you understand how to incorporate the TDI into your personal trading. Thank you so much for having me. I wish you the very best and you'll have a pipful week.